All right, so here we go. So Mark Anielski, thank you so much for joining me. I'm really excited about this conversation. Great to see you.
Thanks, Lorraine. Nice to see you too.
Yeah, and I've given you a little bit of the housekeeping about what we're about to do. So what I'm going to do is just jump right in and ask you to introduce yourself in whatever way you would like to sort of tell the world who you are.
All right. Mark Anielski, located here in Edmonton. I have many different disciplines. Started in accounting with what was Coopers and Lybrand back then, PwC. Then I went into forest science, which is a total departure from auditing, and became a forest economist by profession, and then eventually moved into areas of finance, treasury, and performance measurement, and helped establish the first GRI guidelines for sustainability accounting, and just kept going. And then my focus now has been on well-being measurement. Kind of a performance measurement guy, and always interested in new accounting standards for understanding well-being and sustainability. So I've sort of spent my career in trying to advance new accounting protocols, and I do have a love for all notions of banking and finance and how money's created, and bonds and all those things. So I'm currently working exclusively with First Nations on their kind of aspirations for economic self-determination. So pretty varied background. Author of The Economics of Happiness in 2007, and my second book, An Economy of Wellbeing, in 2018. So
awesome. Yeah, I was actually just about to prompt you to say, tell us about your book. So I'm glad you mentioned those. Strongly recommended. And if we have time towards the end, maybe we can riff a little on your thoughts on fractional reserve banking. I feel like that's one of the places you sparked a lot of great interest. Well, thank you for that introduction, and listeners/viewers are in for a treat to hear more of your thoughts. Just before we go into the nuts and bolts of this conversation, I just wanted to double check if you have any commercial relationship with TD Bank, the company that we're going to be talking about.
No.
Okay, cool. And also, just in the spirit of transparency, I always share how I come to be connected with my conversation collaborator here. So you and I haven't had the pleasure of meeting in person yet, but we've had a number of collaborative conversations. I was very honored to be a guest on your podcast, which tell us the name of it so I don't say it wrong.
I always forget. I think it's just the economics of well-being, or something like that.
Awesome.
Yeah. I always forget the name of my own podcast. So.
Excellent. So I don't feel too badly. And we've exchanged ideas and thoughts and general, I'd say, musings about the potential for the economy to be really tilted towards well-being. So I feel like we're birds of a feather and really working towards similar objectives. So
right. Yeah.
Good stuff. Well, so we're going to be talking about TD Bank and whether or not they contribute to or undermine the future we want. And one of the things I find really helpful before we go too far down that track is to hear in other people's own words. So in your own words, what is the future you want? And I'll just frame it a little bit, as you know better than many. There are so many terms, right? Sustainability, sustainable development, circular economy, regenerative economy, et cetera, et cetera. Whatever the label, as much as you could, just give some color commentary to what is that future that you want?
Well, the desired future I want for all, I will say broadly speaking, money creation systems is that, currently 98% of our money is created through private bank loans, debt instruments. And that's problematic over time because the debt through compound interest grows exponentially. And no one really pays attention to that on a macro level. Very few people, nor do they understand. And there's nothing wrong with how banks loan origination process, if you understand that. And it's kind of like magic in a way. My business students, I would try to explain in one lecture, that you study economics or business and you don't really know how money's created. nor do the loans officers in the banks. I mean, they don't really think about, well, where did that mortgage actually originate? And so my whole thesis has been that if money could be created more in parallel with assets, really backed by assets, especially natural assets, and TDs being, I will put a plug in for TD being very progressive on the natural capital accounting file and supporting those kind of ecological service valuation efforts that some of economists have been trying to push. But if the creation of credit, and both at the national level, the central bank in concert with the private banks, were to create credit in relationship to, say, well-being aspirations or a proper balance sheet, then I think that would be a more exciting future, because today we've got this runaway debt bubble that can't ever be resolved without basically imploding. No matter, it doesn't matter who you are, and the whole world is in this kind of musical chairs game. So that's been my kind of proposal, is that and sometimes I go as far as say banks can actually create loans without charging interest, and that gets people, especially my banking friends, like, you can't do that, or you can't say that. And I said, oh yes you can, because if you know how loan origination works, you can create the perfect amount of liquidity in a system that's aligned with the laws of nature, with the principles in which natural systems have always operated and remained resilient, even though our creative systems, banking and money creation, have not mimicked nature.
Yeah. Oh, wow. You're reminding me why I really wanted to have this conversation with you. And although we are going to roll up our sleeves and go a little bit more into the details on TD Bank, just given that you literally wrote the book on the well-being economy, can you give us a little bit more color commentary about what's different in the world when that future that you just described, that sort of naturally aligned monetary system, exists? What would be different if we looked around us in our lives?
Well, for one thing, I'm one of those economists that's calculated the cost of a debt-based money system, and I figured at least 50% of our annual, or actually 50% of our consumption, whether your household, business, even government, is embedded interest charges in the total amount of debt that 98% of it was created by private banks when they issued loans. That's a big problem. That means, how can you can't address things like climate change unless you understand that hidden cost of interest, which doesn't show up anywhere, doesn't show up on your receipt like GST, or doesn't show up in the GDP accounts, but it's there because there's people, we're all paying interest on these debts. So this is a big problem for me. This cannot, this has to be addressed when you're dealing with things like climate change, because there's this pressure, built-in pressure, and it's not like we will collectively agree, let's just forgive all the loans and zero out, right? So none of us, that's why it's a kind of musical game kind of scenario here. So in my world, if I had a magic wand, I'd write off all the debt. People would scream at me and say, you can't do that. Well, what if we started from, what if we rebooted the whole system and then created a monetary system where the private banks still operate, they still issue loans, but they're issuing loans specific to sustainable enterprises that clearly have a measurable, verifiable well-being impact wherever they operate, without charging interest. In other words, all you're doing is you're collecting the cost of your licensed money creators. That's what banks are. They have a charter to create money out of nothing, literally, by issuing loans. Central bank has a similar role. It can purchase bonds, government bonds, or it can deal with currency creation. So the two kind of entities can operate together, eliminate a huge cost driver in the economy, and basically reduce the pressure, stress, not only in the environment, but our own lives. So our work weeks would actually be reduced. So I've kind of played this out, and I've done it on spreadsheets, proven that it can happen. But, naturally, I'm not surprised that there's very little uptake about this subject, because most people don't have a clue how it all operates.
Mhm.
And so why would there ever be a conversation, a treasury board or, you know, finance and banking worlds or conferences?
Hmm. Right.
I know it's kind of heavy stuff, and
No, it's perfect. It's exactly why I wanted to bring you here. So thank you for giving that deeper explanation. And now let's jump in a little into the world of TD. So hold that future that you described, that sort of realm of possible economic reality as a thought bubble as we go through the next few questions. And I'd like you to share your impressions of the impacts that TD Bank is having. And I mentioned briefly ahead of this call, if you want to go specific to TD, go for it. If you want to talk more widely about the banking scene in Canada in relation to that economy. And what I'm really looking for here is what you're seeing as impacts, activities as a result of the business model. So not the kind of charitable giving or the community engagement. If you see some blur there, I'm listening, but I'm really looking for your thoughts on how the business is potentially contributing to that future you just described. So the positive impacts. Anything come to mind there?
well, like I said, I do I feel that TD is being, I mean, it's got to be second to second maybe only to RBC in terms of balance sheet and assets. Of course, I could be critical of all the, you know, when you look at their main source of revenues, it's, you know, it's not the traditional banking, you know, lending, it's derivatives, and it's, you know, these financial instruments that everyone plays in the big casino with. So I could be critical of all the banks for playing in that game. But I think the interesting thing is the other aspects of TD. So yes, they've been advocates for, or champions really, surprisingly, of natural capital, treating natural assets, you know, in whether it's large cities like Montreal or Edmonton, in terms of like, how do we understand these natural capital assets? How do we treat them? How do we finance them? How do we insure them? Because TD, of course, has, in fact, full disclosure, we have TD Meloche Monex insurance policy, right?
Uh-huh.
So I'll be creative here, thinking if TD Meloche Monex isn't thinking creatively in terms of, for example, why aren't there premiums on companies that have a verifiable large carbon footprint?
Mm-hmm.
You know, is that up to the reinsurance industry to, so, you know, these relations between Munich Re, Swiss Re, and say TD or you know, retail insurance? I think it's an interesting question.
Mm-hmm.
And I honestly, I cynically say, if there's no action, what I just said, then who's actually serious about climate risk?
Mm-hmm.
So, and why isn't it that my insurance premium on my house should be reduced significantly because we put solar panels on it 3 years on our garage 3 years ago, and generating 100% or more of our annual electricity consumption.
Wow.
So, but I don't get any credit. You know, I have all kinds of other stuff in my house that, you know, for, you know, what do you call it, sewer backup and all these other things. But I don't get a carbon credit for my choice to invest in solar panels. I'm contributing to the carbon liability mitigation on the planet.
Yeah.
I don't get that. That doesn't, you know, should I get a premium if I have an electric car that's now getting powered by the sun, by the solar panels? You know, that premium or discount or credit on my insurance policy, I think, should reflect the fact that, you know, carbon is at least $50 a ton,
Yeah.
not more.
Yeah.
So those are the kind of things, like, you know, I'm always pushing companies to go a little further than, you know,
Yeah.
and distinguish yourself from the rest of the pack. You don't all have to look the same and act the same. So yes, kudos to TD for being progressive in many regards, but not far enough, in my opinion.
Yeah. You know, that leads to two questions. I'll put them both out in case you just want to pick one, or they might be related. One is, when you talk about the more progressive nature of their approach to natural capital, how are you, or are you seeing that implemented in any way beyond sort of communications or noises? And the second part of the question is, given the work you're doing in First Nations communities around sort of wealth sovereignty in that context, are you seeing any of the big banks in Canada participating in that or making that easier, or are you having to kind of start from scratch and make things up there?
Great question. On the first subject, I don't, as much as I know Brian DiPatrio, I think, or DiPrato, who was TD, economics, so being a very good champion of natural assets and ecological service valuation. But how does that actually land? How do these valuations show up in budgets of cities, or how TD looks at the next bank loan? I don't know. I want to see that on the spec sheet of the next business loan and say, well, we're committed to companies that optimize ecological service values. Well, how does that actually look?
What does that mean?
Because in your business plan. And so banks could actually drive the demand for this kind of valuation further. And I've also said, we should be careful not to throw up some slides, say ecological service values of, urban trees in Montreal is, worth X dollars per, when there's actually no market. You could put all kinds of values you want and say, but markets are markets. And unless there's legitimate trading of value, they're just speculative numbers. They look good. They sound good. And on the First Nations questions, I'm arguing that if a First Nation, following my argument, is actually a true steward of the lands which they never ceded to the colonizing, I'll call them the colonizing banks of London, then they can play either the same game as the corporations of London, the banks have done since colonizing Turtle Island, or they can adopt their own system in which it is directly connected to their traditional teachings and their understanding of that we don't own anything. So then it begs the question, do we even need banks? How does liquidity get created? What is liquidity? What is currency? What is credit, if not already freely available? And so, but yet we're going to play the game because we don't necessarily need to work with the big banks. Or, there's a tendency to say, well, that's the only game in town. And I'm like, no, it's not. Or as one of my chiefs says, you've had the gumball machine for a long time and we want our own gumball machine. And I'm like, you can have your own gumball machine.
Interesting.
You can create your own bank. You can create your own national credit union, right? Nation to nation. You can start to paper your own bonds. Those are the things I'm advocating and encouraging chiefs to think about.
And are you starting to see traction in that? Is that happening?
Yeah.
Yeah. Wow.
It's happening. But again, it's a mindset, because if you're born into this matrix and you're like, well, first of all, you don't understand how money's created. And when you do, as Henry Ford once said, there'd be a revolution tomorrow.
Yeah.
And it's not because we're angry. It's like, well, how come these few corporations have a license to print money and I don't? I'm a sovereign person. I have assets. Now, and maybe in the future, in a blockchain kind of scenario future, I mean, that's a whole other subject, right? Blockchain technology and all these smart contract conversations.
Yeah.
Private versus public blockchain. And, that's I know that's what the banks are very much interested in, those future platforms. So there's lots here.
Yeah. Okay. And I want to run down a few trails. I'm going to bring us back to the degree to which you're seeing the current business model of TD and its peers contributing to, or shifting the focus a bit, undermining that future. So you've described a few things that I would hear as impacts or activities that are making it harder to realize that future. Are there other activities where you'd say, actually, this is helping, or no, this is really undermining? Just sort of the commentary, how it looks to you right now.
Uh, I I don't have a place or a basis for being critical, saying it's undermining. I would argue that it makes sense as business as usual, with some nuances on the, as we know, changes. What I'm suggesting is, almost impossible for any conventional bank to contemplate. But one of the reasons I went to Stockholm in 2006, I think, was to study the only interest-free bank in the non-Muslim world, the JK Bank, and brought Bob Williams, who was chair of Van City, with me, and did a forensic side-by-side accounting of an interest-free operating bank and a credit union, which already is a progression from commercial,
Yeah.
And even the CFO at the time, he couldn't appreciate how this non-interest bearing bank could operate. And I said, because he said, in the banking world, it's always been about the spread, what we pay on deposits and what we earn on the loan. And so my argument was, well, that's simple to resolve. I eliminate the spread by just recovering my operating costs like any other business. I know what my profit margins need to be to keep us viable. But for anyone in that world, it just doesn't compute, right? So you can't even imagine something outside of that model. So I guess that's my reflection, is that I can't imagine that model changing very much. I mean, even the debate on private versus public blockchain, if you enter that debate, it makes sense that we would like the blockchain, the young blockchain creators of cryptos, right, would say, we want a totally public blockchain. Because each of us is autonomous. We're not, but the banks would to be advocates of a private blockchain that they maintain control, because, right, you've got the gumball machine patent. So like, why would you give it up?
You don't want to give it up, which seems to me to override the whole concept of what the blockchain is trying to be. So it's this sort of oxymoron scene.
But I just want to reflect historically. What's interesting is, when I went back and studied the origins of accounting, it was Leonardo da Vinci and Luca Pacioli. It was Luca, who was a mathematician, who really made the Italian bankers super rich. Like the Medicis, became a dominant force in Italy, in Florence and Venice, because it was of the double entry bookkeeping system that Luca had actually helped design. So, the banks in that Renaissance period, right, really flourished. So and it was because of double entry bookkeeping, in part, that the Medicis became so powerful. So, again, the accounting and banking, kind of 500 years of this long journey together.
Yeah, that's really interesting. And it kind of reminds me of how come this is so entrenched. But at the same time, it reminds me that, well, it was a series of decisions and things that humans did, and humans are capable of making more decisions and doing different things. So it sort of gives me hope and pains me all at once. I'm gonna move us forward, although it'll build more on what you're saying here. And I'm going to share my screen, and hopefully do you see a Google slide with your name at the top?
Yeah.
Cool. Okay, I'm going to walk us through an impossibly absurd and foolish task, and then I'm going to ask you to respond to it. So you and I both know that trying to box up a very complex dynamic living system or economic model into a simple checkbox exercise is not a good idea. Yet I find forcing things into a matrix has sparked some really interesting reflections. So what I'm going to ask you to do is tell me where to put this bubble, and I'll explain a bit what's going on here. On the horizontal axis, I am exploring the impact on societal health as a result of TD Bank's activities, impacts, etc. And anything to the left of the middle line is potentially undermining society's health. Anything to the right is contributing to that future that you described. So undermining on the left, contributing on the right. And on the vertical, we've got impact on ecosystem health. So anything below the line would be potentially undermining the ecosystem's ability to sort of restore and be resilient. Anything above the line is really contributing to that future you described, that future we want. And this is based on just your understanding, your reflections on their business model, how they go about generating revenue. So with this absurdly oversimplified task, I'm curious if you would humor me and tell me where you think this bubble should go and why.
I would put the bubble at -3 for both aspects.
So about here?
Yeah.
And can you just sort of color in why that would be?
Well, based on what I just argued, and
Hmm?
I don't think TD is any different from any other bank.
Mm-hmm.
Preface that just saying, that the burden of interest charges on bank created debt is so enormous that it is deleterious both to human well-being and health and to ecosystem health.
Mm-hmm.
So they share responsibility in that business model.
Mm-hmm.
And
Mm-hmm.
I could be meaner and put it at -5 because it is quite egregious. So and I don't see any movement away from that model.
Interesting. Would you recommend that I drop it down, or what feels like the right spot?
Well, given the size of the burden, I would say it's almost -4.
Mm-hmm.
And I'm probably one of the meanest guests you've had so far.
Oh,
No,
not,
maybe not. Maybe not.
but I mean, people have different feelings about large banks, let's say, but I'd say you also have a more direct relationship with the economy than many people.
Well,
So,
I say that because I know there's alternatives to the way
yeah,
banks could operate.
yeah, yeah,
And so that's how I am coloring
yeah.
this. I'm not pointing fingers just at TD.
Right.
And again, I would say, I would put them on a positive front if they were given their position on ecological service valuations, all that. It's great, but the fact is their primary business model is still this usury system.
Right.
And
Right.
it's literally killing us all.
Yeah. Yeah. Well, okay. Thank you for humoring this. I'm going to stop sharing the screen and actually swing us into a more positive mindset. And you've already alluded to this a fair bit, but I want to take us back in here. So I'm just going to run us through a couple really simple imaginative scenarios. And the first one is just this just in. I just received a bit of news. It's quite exciting, actually, which is that you are in charge of the whole universe. There's nothing in the way. There are no limits. Whatever you think is what needs to happen is what happens. What would you change with this company?
If I was the oligarch of this company,
Of the whole universe, it turns out. So the company within it.
well, I would do immediately what I said. I would change the entire. I would do a full. First of all, I do a full cost accounting of the actual costs of creating loans. I would have all my analysts examine what kind of loans are we making. Are they actually oriented to a well-being ROI, or are they just generating, revenues for shareholders that we think demand, constant returns? And by doing that, I would immediately gain, I think, a sentimental market advantage, because people would flock to my bank, our bank, because I would undercut every, I'd be prime -2, right? Because here's the question: what is the cost to create and manage a mortgage, which means a death pledge from beginning to end? And nobody can tell me. It's like, what? Nobody's ever, come on, someone's done the math. So is that 1% over the life of the mortgage of the loan? The first 5 years of a mortgage are killer because they're mostly interest, right?
Yeah.
So that's what we could do about the affordable housing crisis. And I would quickly have the lion's share of banking business in Canada, because I would still be paying good wages, living wages. I'd have happy customers, have great business loans, like businesses we believe in, we have relationships with, not just chasing mythical profit expectations from mythical shareholders that we don't have a relationship with. I would encourage all our members to know that when they put their deposits in my branch in Montreal, I know that it's supporting, Joe and Susie with their little Montreal bagel shop, right? Not just some, I don't know where it's going, some hedge funds or some derivative markets that have no relationship with me as a member. That's what I would do. I'd shake the whole thing up.
Love it. Unfortunately, that was an imaginative scenario. It collapsed back into reality. But there's a new scenario that I'd love for you to try on, which is that although you're not in charge of the whole universe, you do have a direct line with the current CEO of the bank, whose name, if I understand, is Bharat Masrani. And he has great respect for you. He takes your calls. The thing is, he's super busy. So you've only got 30 seconds when you reach him. What do you tell him in those 30 seconds you can?
I'd tell him exactly what I said, but I would do it in a TikTok.
Nice.
30 seconds or less.
Yeah, good stuff.
I don't think I'd change anything, except I wouldn't be so long-winded. Just say, what do you think? What do we got to lose?
Yeah.
Do we give it a shot? Let's try it somewhere in this country. One branch, shake up the whole business model. Just because we're all taught the same way in business school, or you could just hear the chatter. I hear our daughter talking like, same old chatter about the way we talk to businesses and clients, and like, don't need to. Or show me why we have to continue the way we've always done it.
Yeah. Love it. And actually, you're, I think, probably one of the few people I'm talking to who he probably really does take your calls. So hopefully.
Well, I have a funny story that in 2011, I did pitch this kind of macro idea to George Soros and Kyle Glazer, who was vice chairman of Deutsche Bank at the time, at the World Economic Forum. I wasn't there. My friend Toby Heaps was there.
Oh, nice. Yeah.
He said, give me a 1-page pitch letter and I said, I think the world's ready for genuine wealth, like a genuine wealth accounting system. And Soros, who had never anticipated would say anything positive, said, I don't think the world's yet ready for holistic wealth. But Glazer said, I'm so intrigued with the idea, I'd be willing to be a Sherpa of the idea of the next G20. That was 2011, 11 years ago.
And then what happened?
Nothing. That's my point. Nothing happens. I mean, Soros, I expected that from Soros, of course. But what is Soros now? 89 years old, and he's never going to change. But when the Deutsche Bank, you heard the news. You heard about Deutsche Bank being incriminated for the police raided their offices.
I got murmurings of that. I didn't follow it though.
I just picked that up yesterday. Yeah. German police raided their offices for just falsifying ESG stuff.
There's so much ESG mud slinging right now. It's like
greenwashing by Deutsche Bank. Oh
yeah, I'd heard murmurings of the greenwashing stuff. I didn't know that there was an actual raid. That is really interesting. It's reminding me why I'm tinkering in the wiring here, because I mean, with full respect for people working really hard to gather meaningful information, you and I both know it's not moving us where we need to go. And a lot of times it's downright misleading for whatever intention is not for me to say. That's interesting. I'll have to follow that trail.
But it is kind of a reflection on our human nature. Like we will game things. I mean, why should we believe that we will consistently be in a place of integrity when we're reporting this data, right? That there's expectation that we look good, of course.
Yeah.
So, the expectation that there's perfectly, there's data bots that can verify a human being always reporting accurately. Like it's just, no, we're just human. We're
That's
weak.
right.
We will behave in ways that are preservational or
Yeah. And even just ignorance. I mean, full disclosure, and I've mentioned this somewhere on a recording before, but the reason I'm doing this is because having spent the last 20 years creating those reports, it just became increasingly obvious that even the like really good ones, and you could put good in different levels of detail, aren't creating that economy that you described. And I share that wish that that's the future of our monetary system. And they're just kind of thickening the paint in the walls of the echo chamber. I mean, they're really not driving meaningful change. I could go on there. I'll say that. So that scenario, I look forward to the CEO taking your call. You've already leapt aside from him and gone to others. This will be public though, so hopefully he'll get the memo. That's actually the last formal question I have for you. So my only other question is just, are there things I didn't ask you about that you'd like to share thoughts on in terms of how either TD Bank or banking in general could contribute to that future that you described? Any other morsels you want to put on the table here?
Well, I think at the even larger international level, you have the Bank for International Settlements, and that. So it's at that level, or the the world of investment banking, or what was called merchant banking, right? That's they could play, as though investment banking has got a bad rap, but the original spirit of merchant banking, right? I think is a fascinating thing to kind of reimagine. And Edward Bousted, like basically the father of merchant banking, when he went to Singapore. So I kind of I'm looking at that too, and and then when banks at certain even higher levels of loan creation, the so-called mezzanine levels, Barclays, et cetera, when they get serious about these seemingly benign conversations about assets, and they get creative in terms of thinking about new ways of papering bonds, right? Then I think that's a whole new frontier, and an exciting one. So
awesome. Well, thank you for adding that in, and thank you again, Mark Anielski, for your time, your wisdom, your vision. It's a real treat to hear your thoughts here. I really appreciate it.
thanks, Lorraine. Thanks for having me.